So a lot of the currency is something that people are a lot of frustrated with or, excited by it. First of all, when you look at it on a purchasing power parity basis, meaning like you look at inflation over time in Japan versus the other rest of the currencies, you'll see that it is dirt cheap, just absolutely insane. It's 109% undervalued according to purchasing power parity, according to the OECD, the way they do it versus the US dollar. I have a funny story. Last summer I went to Japan and I took my family, and I have three grown children. Like the youngest was just off to university this year, so and that he's my only boy. And we were there, and we went to Tokyo, and we were sitting in this restaurant. It wasn't super fancy, but it wasn't an Arby's. And we go into this one little room all alone, and we start ordering things, and we're pointing at stuff because it's in Japanese, and we're trying to, use our Google Translate. And my son finds the Wagyu beef, and he starts ordering all these Wagyu beef things, and I'm thinking, oh, geez, like he's going for it. And I'm kind of worried about the bill because you've heard these stories in the past about how expensive Japan has been. Bill comes, and it's like $1,900. And I'm like, oh God, geez, you know what? I shouldn't have let him order all that Wagyu beef and stuff. And then I do the math again, and I realize it's $190. It is dirt cheap, and the reason it's been dirt cheap is because their economy has been in the crapper for a long, long time. They haven't seemed to be able to do it. If you go to the next slide here, you'll see that this is my favorite way of measuring a currency. It's called the Big Mac Index. When you do that, you'll see, you go buy a Big Mac in Japan, you buy one, if you go buy one in Switzerland, it's, it costs you 31% more. You go buy it in Japan, it's 47% cheaper. So the reality is, from a purchasing power basis, Japan is dirt cheap. We go to the next slide, you'll see why. They've gone through no inflation for the past 20 years. It's been absolutely brutal. This is actual outright deflation at times. If you were to look at the US one, it's all green except for the occasional tiny, month or two of negatives. But on the whole, Japan has just had no inflation. And so we ask ourselves, what's changed? And we go to the next slide, you'll see that the actual government has changed. And this is some writing from Goldman Sachs. And the part that I really want to highlight is this part that it says Tokyo Stock Exchange's company governance reforms seem as a game changer. It's incentivizing listed companies to boost valuation and earnings, potentially delisting companies for not using capital efficiency. You actually, now if you're sitting on the Tokyo Stock Exchange and you're trading below book, you run the risk of actually being delisted. So this is a huge change in attitude versus where the Tokyo is, Japan has been in the past. And then we go to the next thing. You'll see that this change in attitude, it's working. We're actually seeing for the first time the Japanese topics. It's increased. It's up a long way, and people are kind of nervous about it. And they're saying, "Oh, geez, it's up all this way, and maybe I should sell it." And when you look at it on a price to book basis, it's still dirt cheap. And the other thing,
hey, Kevin, if I could just interject,
yeah.
just want to interject here because my subscribers, our readers, are very programmed to understand the importance of big breakouts. And our thesis when it comes to breakouts is the longer the range has been in place, the more meaningful the breakout. And we're basically going back for 35 years here, making a 35-year new high. So it is incredibly significant in our way of looking at things. So that's one point. And also, maybe before you get off Japan, the idea of are they going to be winding down yield curve control to try to, because I think you believe that it's intervention by having the Bank of Japan buy the yen can only do so much. They've actually got to get real interest rates, or at least some kind of meaningful interest rates. But if that happens, what the ramifications might be of that?
Right. So, the Japanese government, they can go and tell everyone that they got to be more corporate friendly, but that's not really the reason you should be buying Japan. That's just a tailwind. The real reason you should be buying Japan is that they have extremely accommodative monetary policy and also fiscal policy. And they finally are going to break themselves out of this deflation that they've had for a long time. Now, that is why the yen is so cheap. And that is why their economy is doing so well. Now, eventually what happens is Japan at this yen rate, 155, they're stealing growth from the rest of the world. That is what is happening, because if you're an American car company and you're trying to compete against 155 yen, it's a lot different than when they were at 120 or 100. And so their economy is flying because of this. And ultimately, they are going to need to revalue it higher. This is almost like China did in the early 2000s when they kept their currency lower for longer because they were trying to steal export growth. And so when I think about this, I think about this economy doing really well. I think about the fact that the stock market, although it's run up, it's still really cheap. And not only that, the currency is dirt cheap. Dirt cheap. As I say, you can go there, you can buy, a dinner for nothing. It is the wrong price, that currency. And it's not like, if anyone's thinking about going on a vacation, I say go to Japan now, because it's not going to be here forever. And so, people have been buying the Japanese stock market, and they've saying to me, "Oh no, I got to hedge the currency." I think that's the wrong play now. I think the currency is going to be forced to revalue. I think there's a lot of people doing the so-called carry trade, and when these things come off, they come off in a whoosh. Like if you go back to, I can't remember when it was. I guess it was 1997. The yen went from 155 to 100 in a space of 2 months. And that is what I expect to happen here. And so I love the trade. I love long yen. I love long Japanese stocks, and I think you should short the interest rates, the JGBs, because I suspect that they are going to be forced to let the give up control of their YCC, and interest rates are going to normalize. So on the whole, I think that the Japanese stimulating cheap currency, even cheaper stock market. Buy them both.